Hi everyone. Today we're going to talk about the vertical overall budget. The purpose of this file is to help you granulate all the expenses and compare actual cost versus projected cost. So at the end of the year, we can very clearly see where the delta is. Where is the difference? Are we spending much more than we're anticipating? So the vertical overall budget is an alternative to the elegant budgets. They both work, follow the same logic, but their layout is very different depending on the person who's using them. So let's start with the click me first. The question that this file answers is how to keep track of my entire budget and compare it to my expectations. Perfect. What do I need to know? It's here some helpful tips for you, the glossary in case something is unclear, and the cells that the questions are from. Okay, so we have it separated like this. We have the income here, and then a 6-month increments, January to June, July to December, and then we have a summary. So we're going to go through all this. So let's start with the income. First of all, we're going to put our starting balances. Let's say we have 5,000 euros in cash, 10,000 in our checking account, 1,000 in savings. So we have a total of 16 grand. Perfect. And we have an income one. So let's say this income is a salary, or we can just leave it at the income one. And we say we make 4,000 here, 4,000 here. We do this is our expected income, so this should be towards the end of the year. Now, actual income is where we would write it afterwards. So we would say, yeah, we have 4,000 here, we got 4,000 here, but in March I got a promotion, so now I'm making 5,500, 5,500, and we copy it to whatever. Let's say in October we're doing extremely well. In November we make 6 grand. Perfect. Let's make more money. And here we see the delta or the difference. So essentially, we have a difference of 16,000 euros between both right here. Okay, let's look at the expenses. Now, in the upper part of the file, this part that I have selected, we have the forwarded balance and the current balance based on each month. So when you input your expenses and income, this is what your balance, this is what your cash flow would look like. So this part here takes all the income and takes all the expenses underneath. So let's put in some expenses first. So here we have our housing. So we estimate that we're going to pay 1,000 euros per month for housing. We're just going to do the first 3 months so we can illustrate it. And the first month we pay 1,000. This one we paid, they increase it to 1,100, and then it stays on 1,100. Let's say they jump with 10%. Perfect. We can do the same with gas and electricity. We thought we estimated it's going to be 100 bucks, but it's like an extra cold winter, so it's 150, and so on. The second one is about transportation. In transportation, you have your car payments. So we know our car payment is 750, and it's 750. But then on the next year, we think it's 750, or the next month, I'm sorry, it's 750. But in actuality, it's not only, but they increase the prime rate, so it's 775, and we can follow the same logic for March. Okay. Um, in insurance, we put all of our insurances, meaning that anything we have for home insurance, health insurance, car insurance, investment insurance, anything we have. So we're thinking for our home we have 500, or that's too much, 75, but it's actually 100 because they changed the policy. We have a life insurance that is always estimated at 100 euros, and it's always 100 euros because we've locked it in at that rate, and so on. So all of your insurances are here. Now, daily living is where we would put things that we spend on daily basis. So here we have 300 euros for groceries. We actually just spent it this month 290. Here we have 300 estimated, but we had some guests, so we spent 350. And same, we have 300, and then we spent 400 because we were getting ready for something larger. So it's good to adjust your actual spend or estimated spending based on the actual that you have. Okay. So let's say we buy clothes once every 3 months. We spend 300 euros here. Okay. But we don't have any estimation for it. We didn't plan for it. So, okay. So on this area here, we're going to do everything that is related to children. We may have some clothing, baby supply, school supply. We planned 100 euros for toys. We spent only 80 of them for toys. Awesome. Okay. Here's our entertainment, our movies, our dining out. We go to amusement parks. We go out with friends, whatever it is, we're going to put it here. Having an estimation, of course, always a good thing. Family care is where we put our medical, here and nails. You can put clothing here. It depends how you, if you calculate your budget on the family side or on the individual side. For example, a person and their spouse can have different budgets. Sometimes that's recommended, depends on the people. Then we have expenses with pets. So let's say we have a spider. Why not? And we gotta buy him crickets. Yeah, I think that's what they eat. That costs 20 euros, and we know that it costs 20 euros. So it's estimated actual, no difference. Okay. Gifts and donations. This is useful if we have a recurring donation. Let's say we give 5% of our money to charity or 10%, or we have so let's say here we estimate that 50 bucks euros every month they go to charity, and we're like, great, let's do. uh, We expected 50, we give 50. Perfect. There we go. Okay. Now, um, we can also estimate for birthdays. If we know 30 people that we buy gifts every year, you know, we can estimate that 30 people, 50 euros a person. Mhm. That's interesting. And if we divide it by 12, there you go. Our estimation is about 125 euros. So this month we spent 100, next month we spent 200. So that helps you keep a very good idea of where your money are going. We're going to look at the graph in a little bit. We're not going to fill out March for now. Financial obligations. So what we're looking for here is how much money are going out of your bank account. So we have a personal loan that we decided we want to pay 500 euros every month, and that's what we pay. So, but on March we actually want to pay 700 because we have some extra cash. Great. Same with the credit cards, taxes, tax liabilities. For example, we make 10,000 euros and we expect to pay 10% corporate tax, and we say that our taxes will be 1,000 euros. We plan for it, and when the taxman comes, great, we pay them 1,000 euros. Or, you know, we can also do 500 this month, 500 this month. Okay, savings in retirement. This follows the same logic as the financial obligation. Even though it's a contra asset, it's something that's going to bring you money, it's not an expense. It follows the logic of a contra asset. Um, what we're looking at here is how much money we take out of our account. We want to see estimated versus actual. So because we would like to retire, we're going to do this every month. Okay. Legal and some miscellaneous. So these are all the payments. So now we have all of our payments. And we can see that for January, our estimated was 4,000. We actually got 4,000. 37.85 is what we needed to spend. And we're left with 215 bucks. And as you can see that 250 bucks here, they're added to your current balance. So you started with 16 grand in cash. Now we have 16,215. And that goes for every month. Okay, so let's look at the tables for a little bit. here you have what is estimated from the total income. So the housing was estimated at 28%. Your actual spending on it is around 28%. Like if we look at a little bit deeper into the percentages, we'll see that it's not precisely that. 27.9, 27.67. But the difference is 250 euros and it's not that notable. So transportation was 20% of your expenses, insurance was 2%, and so on. So what we can see here is, let's look at this. So we estimated 8%, but we actually spent 11 on daily living. So we overspent here a little bit. Let's see if we have some frappant number. There you go. So legal, we thought it's going to cost us 9,000, but it actually cost us 5, only 5%. So because the actual we paid is 600. That's awesome. And of course, everything is graphed. So this is the estimated versus actual. We know the legal, that there is a difference. So actually versus estimated. So we overestimated here. Here in the savings and investment, the actual is more. So we've spent more than we actually predicted. And we can follow the same logic down below. The attribution here is based on the estimated versus actual. And this is very helpful because we can see the percentage we attributed from the total income. So savings and investment, that's great. This is about the same, how much we attributed versus how much we have used. Now legal, we can see that we have used much less percentage-wise from the total income. And of course, there's another graph that shows you if something is really off balance. Here, as we see, the really off balance is legal. Okay, so July and December, it follows the absolutely same logic. And then we've created that summary for you that takes the 12 months and help you see what your balance is, how well you're moving. You can see the yearly expenses, what you actually spent versus what you estimated. And you can see the income difference here. That's it for this file. Thank you and be healthy.